Welcome back to Investing Talk Podcast. Today, we're zeroing in on a question that's landed in our inbox from many of you. Is Fubotv a good time to buy now? We've sifted through quite a stack of recent analyses, investor reports, market data, the sources you shared to really pull out the essential insights for you. Before we jump in, just a quick request. If you find value in these discussions, please take a moment to subscribe, maybe leave a comment. Your support really helps us immensely. And hey, if you're feeling extra generous, consider buying us a coffee. Also, if there's a specific company you'd like us to examine in the future, just drop its name in the comments below.
Yeah, absolutely. And our goal today really is to cut through all the noise surrounding Fubotv. We want to give you a crystal clear understanding of where things stand right now. We'll look into the financials, market performance, what analysts are saying, aiming for those kind of aha moments, so you can figure out what really stands out to you.
All right, let's get into it then. Let's unpack Fubotv's fundamentals, starting with, the basics, revenue and earnings. Now, on the surface, Fubotv has shown some pretty exciting revenue growth, hasn't it? But is that the full picture?
That's right. They have indeed shown, promising top-line revenue growth in recent quarters. That's definitely a positive sign for a company trying to scale up.
Okay.
However, and this is the big but, the less sunny side, is that despite this growth, Fubotv consistently operates at a loss. Their earnings have been, historically negative, and profit margins are stubbornly low.
Stubbornly low.
Yeah, and maybe the most surprising part of the biggest challenge isn't just that they're losing money, it's how their strategy, especially focusing on acquiring those really expensive sports licensing rights, seems to almost guarantee those losses, unless they get some massive game-changing surge in subscribers to cover those costs.
Right.
And, Wall Street consensus, they don't see a big shift to positive earnings coming in the next year. Near-term profitability, not really expected.
Okay, so revenue growth looks good for, say, growth investors, but you scratch that surface.
Exactly.
And it's maybe not so simple. So what's the real story behind how they're managing their cash, their overall financial health? Is there an underlying vulnerability there we should know about?
Oh, absolutely. When you dig a bit deeper, Fubotv's financial health looks quite challenged, mainly due to a high cash burn rate.
High cash burn.
Yeah, they're spending significantly more cash than they generate from operations, which, naturally, leads to substantial ongoing losses. And to keep the lights on, Fubotv has had to repeatedly raise capital, both equity and debt.
Which means?
Well, what's concerning there is the elevated risk of further dilution for existing shareholders if this reliance on outside money keeps up.
Okay.
That persistent negative free cash flow, it essentially ties their hands, right? Limits their flexibility to invest in new things or, react to market shifts without constantly going back for more capital.
Right. And here's where it gets really interesting for me. How does Fubotv, with these financial realities, actually stack up against its rivals? Because the streaming world is just, it's so crowded, brutal competition.
You're spot on. The streaming and live TV market is incredibly intense. Fubotv is up against giants like YouTube TV, Hulu Live, even the traditional cable companies pushing into streaming now. Now, Fubotv has certainly carved out a niche, right? With its sports-heavy content, that definitely appeals to a dedicated fan base.
Sure, sports fans.
But the question is, how defensible is that niche? The challenge is they face significantly higher content licensing costs compared to their bigger rivals.
Oh, okay.
And they just don't have the same scale advantages that the bigger players have, meaning they might struggle to compete on price or maybe absorb rising content costs as easily as companies with huge subscriber bases and, diversified revenues. It puts them in a much tougher spot.
Got it. Okay, now let's shift to valuation. How does the market actually value Fubotv? We've got some interesting numbers, especially since, like you said, they're not profitable. So do the traditional metrics even work here?
Exactly. That's the key point. Because Fubotv isn't profitable, standard metrics like the price-to-earnings ratio, the PE, it's not meaningful. There are no earnings to divide by.
Right. Makes sense.
So we have to pivot to other ratios. We look at the price-to-sales ratio, or PS. That compares the stock price to the company's revenue. And for Fubotv, it's significantly higher than, say, incumbent media companies.
Okay, what does that tell us?
It tells us the stock is priced for very, very high growth, even while it's operating at a loss. Investors are clearly putting a big premium on future potential, not current financial performance.
Okay. And what about the price-to-book ratio? What does that add to the picture, especially with their need for capital?
Right, the price-to-book, or PB ratio, that measures market value against the book value of assets.
Yeah.
It's also elevated for Fubotv. And that's largely because of those ongoing losses and the declining shareholder equity that happens when you keep having to raise capital. Essentially, the market's valuing the company at a multiple of its book value that suggests, well, considerable optimism, especially given the financial challenges.
Wow.
What's fascinating here is you look across all the major valuation ratios for Fubotv. They are meaningfully higher than the industry average. This really reflects a very high risk profile, and it leaves almost no margin for error in terms of future execution. It's a bet on potential.
A big bet.
Yeah.
So when we take these high ratios and run them through the more complex valuation models like DCF,
Right.
what do those tell us? Are these optimistic valuations justified, or is there a disconnect?
Well, when we apply discounted cash flow models, DCF,
Right.
which try to project future cash flows back to today's value, and then we do relative valuations against similar companies, the data suggests that Fubotv stock might actually be overvalued on a fundamental basis.
Overvalued, even after the big price drops we've seen over the last couple of years.
Yes, even after those significant declines. For these valuations to make sense with the current price, Fubotv would need a dramatic acceleration in revenue growth and, crucially, a rapid emergence of profitability very soon.
Okay.
Without that, the models basically point to a stock that's priced beyond its current fundamental reality.
That's a pretty stark fundamental picture.
Yeah.
Let's shift gears a bit. How has the stock actually been behaving in the market? What does the technical analysis tell us? Sometimes the market's mood offers different clues than just the fundamentals, right?
Absolutely. Market behavior is key, too. Looking at the price action recently, Fubotv has been trading in, well, a relatively tight but definitely volatile range, specifically between about $2.50 and $4 as of August 2025.
Okay, $2.50 to $4 range.
Yeah. And when we look at analysts and algorithmic forecasts for the next 12 months, the range is pretty wide, from as low as $1.45 up to maybe $4.63. The overall consensus, though, it leans kind of bearish to neutral.
Bearish to neutral. Any key levels technical traders are watching?
Yeah, for those watching levels, near-term support seems to be holding around that $2.50 mark. Resistance is clearly around $4. And if we did see a bigger rally develop, you'd look for further overhead resistance, probably near to $6.
Okay, so that's the short-term chomp. What about the bigger picture, the long-term trend? Is this volatility new, or is it just how Fubotv trades?
Well, the recent moves are definitely highly volatile, but honestly, it's part of a longer-term pattern for Fubotv. The overarching trend has been generally downward, but it's punctuated by these brief, pretty sharp, speculative rallies.
Speculative rallies, like short squeezes.
Sometimes, yeah. They often happen when the stock gets significantly oversold, technically speaking, leading to short covering bounces. And if you look at moving averages like the 50-day or the 200-day, the price is pretty consistently either below those levels or at best just hovering near major resistance. That indicates ongoing selling pressure. Indicators like RSI Relative Strength Index and MACD, they have reflected those oversold conditions at times, which helps fuel those periodic bounces we mentioned. But overall, the underlying momentum just remains quite weak.
Got it. So weak momentum overall. What's the buzz around Fubotv lately?
Yeah.
What are analysts actually saying now? And importantly, what are insiders doing? Selling, buying. And, what about social media sentiment? That seems to drive things sometimes.
Right. Okay. So the average 12-month analyst price target currently sits somewhere between $3.50 and $4.63. Now, the consensus rating is technically a moderate buy, but, and this is a big but, it comes with significant caution, lots of caveats about the ongoing losses and the cash burn.
Okay, so moderate buy with an asterisk.
Pretty much, yeah. And it's worth noting some recent analyst targets have actually been cut. That reflects, diminished optimism, even from those covering the stock closely. We've even seen downside targets issued as low as $1.45 if those financial improvements just don't show up.
Wow, $1.45. What about insiders?
Yeah, insider activity. There hasn't been any material recent insider buying that we can really point to. Historically, the pattern we've seen is more periods of insider selling.
Noted. And the social media crowd.
Social media. The sentiment there is, let's say, highly speculative and quite divided. You definitely have aggressive retail trader interest, which fuels that volatility we talked about.
Yeah.
But there's very little consensus on the actual underlying fundamentals. It's just noisy, very noisy.
Noisy indeed. Okay, so given all these moving pieces, the fundamentals, the technicals, the sentiment, what could actually make Fubot's story change?
Yeah.
What are the potential catalysts we should be watching for? Things that might shift its trajectory short-term or long-term?
Good question. For the short term, the most significant catalysts are almost always the quarterly earnings reports. So for Fubotv, that means keeping a close eye on, say, late August or maybe early November 2025. Those reports tend to be major drivers of short-term volatility.
Okay, earnings are key. Anything else short term?
Possibly unexpected partnership announcements, or maybe some new favorable content licensing deals. Those could also give a short-term boost.
Right. And thinking longer term, what kind of shifts or, I don't know, breakthroughs could really transform the narrative for Fubotv? What's the big picture catalyst look like?
In the longer term, the biggest game changer, undoubtedly, would be any sustained, credible path to profitability. If Fubotv can actually show a consistent strategy to turn that revenue growth into real earnings, that would be huge, a monumental positive catalyst.
That makes sense.
Additionally, maybe a strategic acquisition. If a larger media player wanted to expand into sports streaming, that could change things overnight. Or even just a significant surge in subscriber growth that blows past all current expectations. That could fundamentally alter the valuation story.
Hmm.
And beyond the company itself, broader industry shifts, maybe regulatory changes that somehow favor smaller streamers, or big M&A deals among competitors. Those could also impact Fubotv, potentially positively or negatively.
Okay. Lots of possibilities, but maybe long shots.
Mm-hmm.
Now let's flip the coin. Let's talk about the downside. What are the really significant risks here for investors, both specific to Fubotv itself and maybe the broader market it operates in? Because every investment has risks, right?
Absolutely. And Fubotv has its share. First, on the stock-specific side, those persistent operating losses we keep mentioning, that's a major concern. And tied to that is the ongoing risk of share dilution because they constantly need to raise more cash.
Right, the dilution risk.
Then there's the company's high dependence on subscriber growth, which
Yeah.
is a vulnerability, especially with that challenging margin structure from high content costs. Plus, the intensifying competition we talked about and the constant threat of losing key content rights or just facing even higher licensing costs, that could really erode their niche appeal.
Okay, those are company specific. What about the bigger picture?
Right. Beyond the company, there are market and sector risks. The streaming industry itself is showing signs of saturation, maybe even consumer fatigue. That makes subscriber growth harder and more expensive for everyone.
Sure.
Macroeconomic risks are also a factor. Things like higher interest rates or a potential recession could squeeze both subscriber growth and advertising revenue.
Definitely.
And finally, you always have regulatory risks in this evolving streaming and content space. It's kind of a minefield out there navigating all that.
It really is.
Yeah.
Okay, so after pulling all this information together, the good, the bad, the ugly, what's the overall thesis on Fubotv?
Yeah.
If you had to sum it up for someone asking that initial question, is Fubotv a good time to buy now?
Yeah.
What would the verdict be?
Okay, boiling it all down. Our overall rating for Fubotv, based on everything we've looked at, is a 3.5 out of 10.
3.5 out of 10. Oof.
Yeah. To reiterate, Fubotv remains a highly speculative, high-risk stock. Full stop. Now, is there theoretical upside? Sure. If their execution dramatically improves, or if industry dynamics somehow shifts significantly in their favor, maybe. But the fundamental challenges, the continued losses, the negative cash flow, that limited competitive moat, they really seem to outweigh the near-term upside potential right now. The analyst price targets we discussed, they reflect significant uncertainty, and there's clear potential for further downside if those financials don't turn around.
Yeah.
And technically, the stock just seems caught, right? Between that short-selling pressure and these speculative, almost meme-style retail rallies, it makes it incredibly unpredictable for most investors. Yeah, and there's considerable downside risk from dilution, from competitive threats, or just simply from poor operational performance going forward.
Okay, a clear, if sobering, picture. Given all that, who is Fubotv for them? In terms of an investment horizon, is this a long-term hold for anyone or something else entirely?
Yeah, that's a crucial question. Given everything we've discussed, Fubotv seems far more suitable for, let's say, short-term speculative trading, maybe playing the volatility around earnings announcements or other news events, perhaps. But for a long-term investment, in our view, long-term investors face just too much risk right now without clear, compelling evidence of a credible path to sustained profitability.
Right.
It's simply not there yet.
Okay. Well, this analysis of Fubotv really does highlight the whole spectrum of investing, doesn't it? From the established giants to these high-risk, potential high-reward ventures. It raises an interesting question for you, our listener. Fubotv's story, it's one of big potential, sure, but it's tied to even bigger challenges, especially around actually making money. What does this kind of information tell you about the future of these niche streaming services trying to survive in a world dominated by giants? And maybe How does that connect with your own investment philosophy and risk tolerance? Something to think about. That brings us to the end of our discussion on Fubotv. We certainly hope this breakdown has been incredibly valuable for you. Thank you for tuning in to Investing Talk Podcast. We look forward to exploring another topic with you next time.